On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, hope you're all well. Let's run through everything that went down last week and up, and then let's turn our attention to the week ahead. And what a week it will be. This week is one of the busiest in recent memory, an absolute monster in terms of releases and events, so plenty to talk about. Last week, a pretty difficult one for most share markets. The S&P 500 in the US was down 1.4%, and most other major share markets were also down slightly. Japan was the exception. That market was one of the few that went up. Locally, the NZX 50 index fell 1.7%. That was its worst week in 6, so it followed many of those offshore markets and came off the boil. A weaker currency has offset some of that recent weakness for overseas shares, that is. The Kiwi dollar is about 6% lower against the US dollar, and it's about 3% down against the euro and the British pound. So if you're a New Zealand investor with holdings in US shares or European shares or UK shares, you will have lost on the one hand and won on the other, and maybe you've come out about even in recent times. October overall turned out to be a fairly difficult month for markets generally. So it was tough for equities, shares, and it was tough for bonds and fixed income. It was actually the worst month for global bonds since September 2022. So that's back where we were in the throes of that very high inflation and interest rates rising rapidly. US Treasuries fell 2.4% over the month of October, and that came on the back of more solid economic indicators, which saw investors dial back hopes of bigger and more rapid rate cuts from central banks, and that saw market interest rates, longer-term interest rates, and longer-term US Treasury yields rise. New Zealand corporate bonds actually held up better. They fell just 0.3% over the month of October, so they were much more stable. Right, just running through some of last week's economic releases, we saw core PCE inflation for September come in a bit hotter than expected in the US. PCE stands for Personal Consumption Expenditures. That is the Federal Reserve's preferred inflation measure. The core measures came in a bit hotter than expected. So the annual headline PCE inflation rate slowed to 2.1% per annum. That's the lowest since early 2021. But the core PCE inflation rate was unchanged at 2.7%. That was marginally higher than expected, and it was very close to where it's been for those past 4 months. So there is still an element of stickiness amongst some of those core inflation measures. We also got some quite soft economic releases out of the US. They were disrupted by weather and strikes, so I think you can look through them to some extent, but still had some weak manufacturing figures and a weak US jobs report. The jobs report was the big one. This came out on Friday night, so we saw it on Saturday morning. Just 12,000 jobs added for the month. That was well below forecast for about 100,000, and it was actually the lowest that we've seen since December 2020, when we were in the thick of COVID with the lockdowns and so forth. Better news was that the unemployment rate was unchanged. It stayed at 4.1%. That was pretty much in line with expectations. And most economists are looking through that weak headline figure because there were hurricanes, there was a Boeing strike, that sort of thing did impact job creation and some of these statistics through the month of October. So probably a bit difficult to really learn too much from that report because of those one-offs. We also got the ISM Manufacturing Index. This was also out on Friday in the US, so we got it on Saturday here. That was a little on the soft side. It fell to 46.5. That's the lowest in more than a year, the lowest in 15 months, I think. The new orders component lifted slightly, so that's maybe better news, while the prices paid measure also rose, which isn't quite so good. That suggests that inflation pressures are still out out there, that hit the highest level in 5 months. We'll get the services sector ISM for the same month, October, this coming week. That's out on Tuesday, and I think that will look a lot better, so keep an eye out for that release. Here in New Zealand, the key thing I was watching for last week was the ANZ Business Outlook survey for October. Mostly good news in this, although a couple of things to keep an eye on too. Headline confidence rose even further. That increased to 65.7. That's the highest in 10 years. Own activity, which is a better leading indicator for where economic growth is going, that also pushed slightly higher. That's at the highest levels in 10 years, driven by improvements in the manufacturing sector and in agriculture. Less positively, the proportion of firms that are intending to raise their prices in the coming 3 months increased. That's actually the highest level in 6 months, and it's risen for 4 months in a row. Now, that's something we really need to keep an eye on, because the price setting behaviour and intention of firms can have an impact on domestic inflation. So something we need to watch closely. The economic outlook is looking brighter, and that's improved because you've seen some OCR cuts. So we're all looking ahead to 2025 and we're more optimistic about the future. However, if the businesses out there start thinking, well, this is a fresh opportunity for us to recoup some of those recent cost increases by raising prices again, and we can get away with that, or we think we can get away with that because the economy's getting better, that might just suggest that we haven't defeated inflation quite as convincingly as we had hoped. So the Reserve Bank won't have ignored that. That sort of thing won't go unnoticed. We do still need to keep an eye on it. Across the Tasman, we saw some inflation figures come out. Inflation did slow, but not enough for the Reserve Bank over there. The CPI came in a little weaker than expected in the September quarter, but it's still far too high for the RBA to consider cutting interest rates, and they've got a meeting this week. So the headline inflation rate rose 0.2% for the quarter. That was a little below forecasts. That saw the annual inflation rate increase 2.8%, a little below forecasts, and it's down sharply from where it was 3 months prior. It was at 3.8% 3 months prior. So it's come down from 3.8 down to 2.8. It's at the lowest since 2021. However, the CPI measure that the Reserve Bank uses across the Tasman, which is what they call the trimmed mean CPI, that's still running at 3.5% per annum. So again, down from where it was before. It was 4 in the June quarter, so it's come down from 4 to 3.5. It's the lowest in 3 years, but it's still too high. So I think the Reserve Bank of Australia will want to see more evidence of inflation coming down before it considers easing monetary policy. So they are probably still on hold for the next little while. Turning to the coming week, and it is massive, absolutely massive in terms of key events for markets to watch. And the key one will obviously be the US election, which is scheduled for Tuesday. So we'll see all the action a day later here in New Zealand. It'll be sort of Wednesday afternoon through to Wednesday evening, where you'll see the TV coverage of the vote count. If it's clear who's going to win, you might know by, I don't know, midnight on Wednesday night, or certainly when you get up on Thursday morning. If it's close, might take a little bit more time. I'm not going to dwell on this. I did record an episode specifically about the US election, what I expect to happen, who I think will win, what the market implications are. So go back and have a listen to that one. It'll be a tight race. The polls still look to be within the margin of error, but the betting markets and certainly Wall Street is strongly of the view that Trump is in the box seat. So that will be something to keep a very close eye on middle of the week. It won't be the only thing we need to watch. The Federal Reserve's latest decision is due a couple of days later. They will meet shortly after the US election, and the latest decision will be out at 8 a.m. on Friday morning, New Zealand time. Now, there has been talk of another 50 basis point rate cut in recent times, but that seems to have dried up for a range of reasons. So markets now expect the Fed to move to a regular 25 basis point move. So their first cut was a 50, and some people thought you might see another 50. But now people are thinking, well, this week they'll come down and just move 25. So if we do get a 25 basis point cut, and that's what I think will happen too, that would take the upper bound of the Fed funds rate down to 4.75%, same as our OCR here in New Zealand. That would be the lowest since March 2023. and it would be down from that peak of 5.5%, which again is the same as where our OCR got to not so long ago. So beyond this week's meeting, the Fed next meets in December, then in late January, and then in March. And it is expected to keep reducing its policy rate over the coming months. But at the same time, there is increasing speculation that it might choose to pause at one of those upcoming meetings before resuming its easing cycle. So right now, 59 basis points of easing is priced in across the next 3 meetings. And that suggests that in the eyes of financial markets, there's a good chance of a pause at one of those. Probably not this week. I think you'll get that 25 basis point cut this week, but at the following meeting or the one after that, maybe they will just pause. And then that's because the economy is still in reasonable shape and they don't need to go too quickly. Time will tell. That could change, but that's where we're at the moment. So we've got the election in the US on Tuesday, which will be Wednesday our time, and then you've got the Fed meeting on Wednesday, Thursday US time, which is Friday morning our time. So a very busy week. Central bank meetings coming up this week across the Tasman and also in the UK as well. So the Fed will be the main event, but we'll also get decisions from Australia and the UK. So the RBA decision is due at 4:30 p.m. on Tuesday. Markets see no change. Like I said earlier, inflation's still too high. So the RBA is expected to leave its policy rate at 4.35% for the rest of this year and into early next year until they see that inflation come down. In contrast, the UK has seen its inflation rate come down to a more than 3-year low of 1.7%. So I think the Bank of England has the luxury of continuing to cut interest rates. Their decision this week is out on Thursday evening, and markets see an 80% likelihood of another 0.25% cut, so another 25 basis point cut. That would take their cash rate down to 4.75%, which is again the same as us and the same as where the Fed is expected to be at by the end of this week. Here on the local front, also a busy week. While we're still talking central banks, our central bank, the Reserve Bank of New Zealand, will release its latest financial stability report this week. That's out on Tuesday at 9 a.m. And then they do a media conference at 1 o'clock that afternoon. I think those times have changed from what they were doing last year. So Tuesday 9 a.m. and then 1 o'clock media conference. The financial stability report comes out every 6 months, and it's quite a big picture document. It talks about how the Reserve Bank views the state of financial stability, obviously, hence the name, and the risks to it. So always really interesting, and it has a wealth of information. It's a good read, and it is worth watching that press conference. That's on Tuesday. The next day, Wednesday morning, we will get the results of another dairy auction very early. 3 weeks ago at the last auction, we saw little change against most of the key product lines. The headline dairy index is up about 13% so far this year. Prices looking pretty solid. We've seen an increase in the milk price forecast from Fonterra, so it's sitting at $9 now in terms of the midpoint. That would be the second highest of all time. And one thing that has moved in favour of dairy exporters of late is that the currency has gone their way. As I said earlier, the Kiwi dollar has weakened quite sharply against the US dollar in recent times. The last month it's down about 6%. So that is a positive for dairy farmers because dairy prices are priced in US dollars like most commodities. So that has maybe moved in their favour. Maybe there's even some upside to that $9 midpoint forecast. Later on Wednesday, we will get the main event here in New Zealand, which will be the labour market report for the September 2024 quarter, unemployment and all the other figures that go with it. 3 months ago, the unemployment rate increased from 4.4 to 4.6, and it's expected to go higher again this week. So for the September quarter, it's expected to increase to 5% from 4.6. That's what the Reserve Bank had in its last set of forecasts, and that's also what the economists out there are on average expecting. So 5% is what it's expected to go to. That would be the most in 4 years, and it would be quite a bit above that multi-decade low of 3.2% that we saw in early 2022. However, at 5%, you're still actually very close to the 25-year average, which I think is about 4.9-ish. So it'll be kind kind of the norm, but much higher than we've seen over the last 2 or 3 years. This is also really important because it's the last major release ahead of the final Reserve Bank meeting of the year, which comes at the end of November. So it will be very closely watched. At the moment, people are expecting another 50 basis point rate cut to the official cash rate, but there is an outside chance of a bigger 75 basis point cut. The market is ascribing about a 20% likelihood to that. So it's more confident of that 50 basis point cut, but you can't rule out the bigger one, especially when you consider that there is quite a gap between this coming meeting and then the Reserve Bank's next meeting. So they meet at the end of this month, and then the next one isn't till mid-February, which is almost 3 months later. So if there's a case for a bigger cut, it would be that they have quite an extended break over the summer. But the other thing that could sway their decision from 50 to 75 would be a much weaker unemployment report, a weaker labour force report where unemployment goes up more than they were hoping for. So that will be very much in focus this week. Last but not least, the reporting season will continue, and it's been pretty good so far. In the US, about 70% of companies have reported results. That's based on the S&P 500 index, so more than 2/3 of the way through, and about 3/4 of companies so far have beaten earnings expectations. And when you look at the index overall and sort of aggregate all of the releases, markets see earnings growth of about 5%, 5 or maybe slightly above that relative to the same quarter a year ago. And that's better than people were expecting when the earnings season began. So it hasn't been too bad. 6 of the Magnificent Seven companies have reported so far. We saw 5 of them last week, so it was a very big week. Seen kind of an equal split in terms of positive results versus negative results, and that's based on the market reaction. So on the positive side of the ledger, the market liked what it saw from Tesla, from Alphabet, and from Amazon. And on the negative side of the ledger, Microsoft, Apple, and Meta weren't taken quite so well. So it's definitely been a bit of a mixed bag. The 7th member of the Magnificent Seven is NVIDIA, and they report, I think, in about 2.5 weeks' time. I think it's November the 20th, which would be 2 weeks from this Wednesday. So that will obviously be closely watched later in the month as well. But this week, there are about 100 odd more S&P 500 companies scheduled to announce results. So lots of highlights across the world, not just in the US. Lowe's, Zoetis, CVS Health, Novo Nordisk, that one will be in focus. So again, the reporting season will be closely watched. Here in New Zealand and across the Tasman, there's a few things to keep an eye on. Manawa Energy reporting a result on Friday, an AGM from Vital Healthcare. Quite busy in Australia. 3 of the big 4 banks will release results. Westpac on Monday, National Australia Bank, that is the owner of BNZ, on Wednesday, and ANZ Bank on Friday. So these are always really interesting because the banks obviously make up a big part of the Australian share market. So when they do well, the whole market tends to do well, and vice versa. But you also learn an awful lot about the Australian economy and the New Zealand economy, because you look at bad debts and you look at sort of profit margins and net interest margins and what's happening in the business book versus the farming book versus the residential book. You do learn a lot from looking at the bank results. So there is so much to watch. Obviously, the US election will be what we all focus on, but also the Federal Reserve meeting, the RBA, the Bank of England, a really important unemployment report here in New Zealand, and a swag of corporate releases. So it'll be a busy one. Enjoy your week, and we will talk again soon.
For more insights, visit craigsip.com.